for September, that would be. That's a month, September 9th of last year. We had David make these selections. And we'll start with Archer Daniels Midland, the agricultural company. You're out of this one, and you have described what sounds like quite a disciplined approach to getting out of stock. So what happened here? The story just changed?
Archer Daniels, we just frankly got stopped out of the stock. The agricultural space over the last year has been choppy at best. There's been very little that's done well. We owned Archer Daniels because we believed that pricing for oil seeds was likely to be lower, but they're in the processing business, that they should do well. But there's just been so much that's worked over the last year that this was just not one that we stayed in.
You were out of this several months ago?
Yeah, we were out of this actually in the fall of last year.
Okay. Now, a big winner for you is Tesoro. This is a refiner. And I want you to explain how it is that in such a tough energy environment that this company has done so well.
So for the 4 years leading up to last summer, the boom in energy production favored the companies that were producers and service companies and the infrastructure companies. We spent a lot of time talking about pipelines like IPL and Keyera and so on. And that was because we were in a market where there was more demand than supply. And there was pricing power, and price went to $106 a barrel. And in the summer of last year, the models that we use that track the percentage of stocks within a universe that are performing well started to show deterioration for the energy group, meaning stocks one by one were starting to break down. And that was prior to or around the time price of oil started to peak out. Now, as it happens, it tends to be that people, when things that have done well for a long time start to underperform, they say, well, here's my opportunity to buy them cheaply. But very often it's because there's been some watershed event, and it became clear to us that oil production really has just become mass manufacturing. They know how to find it. They've got the equipment. They've caught up in building equipment. Lots of people know how to operate it, lots of capital available. And so it's our view that, in fact, we may be headed into a period where we'll have prolonged lower prices for energy. Now, if you're a refiner and you're constantly buying crude, and turning it into a refined product and selling it into the market where there's a perceived value for that product, which may be higher, you have an opportunity to expand your margins. And that's what's happened for Tesoro. Of course, as the price of oil has fallen, certainly gasoline prices didn't fall quite as quickly. And so they're a natural beneficiary. So consumer is a big beneficiary of low energy prices, and refiners are a play on that as well.
So basically, Tesoro's input costs are way lower now.
Yeah, prices for gas don't come down as quick as they go up. Mm-hmm. And we're in a world where there is a lot of crude in North America. They're still not really exporting it. Tesoro's got an opportunity to export refined products. So the refiners are natural winners in this situation. And you could look at Valero, or you could look at Marathon. There's a number of them that have done very, very well.
Now, you mentioned one of your themes is consumer-driven stocks, and here's one, the Home Depot, which has done well.
Yeah, Home Depot continues to be one of our 3 or 4 biggest holdings in the firm. It hit a new high today. It's one I've used a couple of times as a top pick. I just can't keep using it, sadly. But natural beneficiary of a stronger consumer, pent-up demand from home improvements. And this is a company that was great to begin with, got better through the recession, and just continues to execute and take market share. So it's one I would buy today, but we've owned it for quite some time.
The Home Depot, Tesoro, and Archer Daniels Midland, the last one there, David is out of, as he mentioned, several months ago. We have half an hour to go right after this break with David Burrows and your questions, and we'll get back to those after this. Stay tuned.